So apparently we have 104% tariffs on China now. It's all a lot, right? What's very confusing is there's no real math behind the 104% tariffs on China. China is now devaluing their currency to make their exports look more attractive, and it's very much like a trade war is happening between China and the US, depending on who's going to back down first. Treasury Secretary Scott Bessent has come out and said, listen, there's going to be some trade deals happening soon. He flew down to Florida to talk to President Trump, and I think has convinced President Trump to talk to these countries and get some sort of deal across. But what's really interesting about this video where Treasury Secretary Scott Bessent says that is he's carrying a cup of coffee. And so coffee is a very good example of the trade deficit, because when we think about coffee, the US has to import beans. We cannot make coffee in the United States outside of Hawaii. We have to import instead because we just don't have the climate for it. We just don't have the climate to make coffee beans. And so we take advantage of something called comparative advantage, where other countries have the proper climate to produce the proper beans. We buy those beans, those countries get US dollars. Presumably they buy things from the US with their US dollars. But this is a great example of a coffee trade deficit and how a trade deficit is not always a bad thing. And so the stock market obviously was not super happy about that today, just as it was yesterday. We're seeing stocks sell off, and then bonds are also not doing very well. Yields continue to go up because investors don't see US government debt as the safe haven that they used to. Nobody likes that, and it's a trade war on the basis of not understanding trade deficits.